the pre-market, Tesla is down 1.5% to 208.82. Now, to me, none of this makes sense. In hindsight, I wish I'd have held on to my 255 put just a little bit longer, but 300% gains is typically my max, and I didn't see the stock falling much lower than $215 per share. In fact, I put my money where my mouth is and bought a 215 call last week. That effectively expires November 3rd. Now, I don't have to tell you that the stock is going in a different direction than that call needs to be, but I'm not too terribly worried with an expiration date that's about 2 weeks out. If push comes to shove, I'm in a rolling mode right now. Particularly if Tesla were to drop to 200, I'm going to roll that option, hoping that the remainder of earnings seasons lifts the S&P 500 and the Nasdaq out of their current funk. It's a gamble, but no risk it, no biscuit. Tesla's double miss spooks investors. Rivian CEO allays liquidity concerns. Lucid's underwhelming Q3 deliveries and more. Biggest EV stories of the week. Electric vehicle stocks fell across the board in the week that ended on October 21st amid the broader market weakness and a disappointing earnings report from the frontrunner Tesla. Shares of the company closed at their worst level since June 1st. Tesla's third quarter earnings and revenue missed expectations, sending the stock sharply lower. I guess we'll get to that in a minute. The third quarter marked the first time since the second quarter of 2019 that the company has missed both earnings and revenue expectations. Forget the fact that those expectations were ridiculously high after Tesla had already given their deliveries and production numbers. Auto margin, excluding regulatory credits, a key operating metric analysts focused on, came in at 16.3%, well below the consensus estimate of 17.7%. More importantly, Tesla's techno king Elon Musk's comments on the earnings call did not go down well with investors. He harped on the economic conditions and the difficulty in ramping up the Cybertruck production, while failing to offer any clarity on the margin outlook. Oh, I'm pretty sure it's clear. Margins will come down in accordance with demand in order to stoke volume growth. That is the margin outlook. The company did, however, affirm its long-term delivery growth target of 50%. As far as I know, Tesla still aims to produce 20 million vehicles by 2030. The inverse relationship between demand and production is what's going to determine the price of the vehicles. There is a delicate type wire balancing act that has to occur to make sure that you have just enough demand to meet your production or risk the wait times blowing out much like they did in 2021. The more cars Tesla produces, the less likely this will occur. In the years to come, Tesla will desperately try to stay ahead of that exponential curve of battery electric vehicle adoption. But at some point, the demand will outstrip Tesla's ability to produce the cars. Separately, Musk said in a post on X on Friday that the Cybertruck was absolutely bulletproof during testing. He noted that an entire drum of a Tommy gun was emptied into the driver door Al Capone style. No bullets penetrated the passenger compartment. RJ Scaringe told Reuters that the company's recent $1.5 billion convertible green note offering does not reflect issues with its financial health. The new capital raise is meant to create an additional buffer ahead of the investments the company is planning for the manufacture of the smaller R2 family of EVs. The delayed third quarter deliveries report from Lucid dropped this week. The company only mustered deliveries of 1,457 EVs compared to the 2,000 unit consensus estimate. Lucid has guided production of over 10,000 units for the year, leaving the company with a tall target of 3,263 units to meet for the final quarter of the year. I imagine many analysts are going to take the under of that 3,263 units. But you never know. Toyota joins Tesla bandwagon. Japanese automaker Toyota confirmed this week that it has agreed to adopt Tesla's North American charging standard for its battery EVs. This news flew well under the radar as media analysts focused on the Q3 earnings call of Tesla. It comes of no surprise. If you plan to sell vehicles in North America, you're going to need the North American charging standard. The next big collaboration with other auto manufacturers will be with Tesla's software. The next big catalyst for me is not the Cybertruck event. That rolling billboard is going to do everything in its power to make sure you associate EVs with Tesla. But I'm looking for more version 12 news. When are we going to see that roll out to some of the OGs of FSD beta testers? When are they going to give that thing to me? That's what I want to know. In conclusion, Tesla is dirt cheap right now, but you gotta have a plan when the stock goes up and when the stock comes down. And while I don't believe the stock will remain suppressed for much longer, in addition to buying as many shares as I possibly can, I intend to pounce on the opportunity that rests in Tesla's volatility. RJ felt the need to explain the convertible green note offering. Much like Lucy, Lucid's got some explaining to do. Will they hit their target of 10,000 vehicles produced this year? A better target might be 8,000 vehicles produced. And Toyota joins the NACS family. A no-brainer decision for anybody selling battery electric vehicles in North America. That's all I have for you today. Be easy. Peace.